India and Egypt sign an $8 billion MoU to build hydrogen plants. And Glencore also produced less copper this year than previously forecast. Hello and welcome to the program. I'm Ini John Mekwa. Let's start off as usual with market numbers from Africa. The market closed this week looking really good. Even the NGX that has been in the bearish zone has recovered. The NGX went slightly up 0.24% as intraday. We do hope it sustains that. South Africa's JSE index is also considerably up, almost 2%. Egypt's equities market as well, Kenya, closed Thursday up 0.88% and 1.42% respectively. To the Middle East, where major equities are also in the green at intraday, the United Arab Emirates, the Abu Dhabi index were up 0.86 and 0.39 for Dubai. Still within the region, Saudi Arabia and Qatari exchange, which closed on Thursday, were positive at the close of trade, as both indexes gained 0.85 and 0.15% respectively. Let's go to Europe now. The latest EU GDP figures are out, and that means that about a video done earlier than usual. We have Daniel Winter now joining us from Berlin to give us some of the details of the figures that were announced earlier today. Hi, Daniel. Good afternoon. So what do the figures tell us?
Well, the euro area economy grew 0.7% in the second quarter compared to the quarter before that, and that was better than expected. It may seem like a reasonable figure, and it is slightly higher than growth in the first quarter, but EU nations can't celebrate just yet. The main problem at the heart of the economy right now is weakening consumer confidence and inflation, and that's risen to 8.9%. Rising growth and rising inflation together is something that we've seen across major EU nations. France was first out of the gate this morning, announcing a return to growth at a stronger than expected 0.5% quarter on quarter. That was due to strong exports offsetting weak demand domestically. In the same period, Spain leapt over 1%, shocking economists who'd expected just a 0.4% jump. Germany, however, the bellwether for the EU economy, disappointed with zero growth quarter on quarter.
Wow. So with this now, what's the outlook for the EU?
Well, it's not looking great. Inflation is still rising. Major economic institutes believe and predict that the EU's GDP growth will slow further next year. As to whether a recession is likely, experts are not in agreement. The US has already entered a technical recession, but markets there are buoyant, as they believe it's merely a technicality and that other economic signs are pointing towards, if not a rebound, then less bad than expected showing in the months and years ahead. It all depends on a few key factors. Will we see any sort of resolution to Russia's war in Ukraine? Will we see a restoration of natural gas supplies to Europe? After all, energy costs have driven the bulk of the price rises. Normally when inflation hits, the central banks simply increase interest rates and try to slow demand in the economy, but there are two problems. Demand for oil, or rather petrol, isn't very flexible. People can't just stop driving to work if it becomes expensive. And the second is that the rise in the oil price is driven by external factors outside of central banks' control. When monetary tools like this are weak, there's not a lot that can be done in the short term. So we're looking at an improvement in energy supplies from other sources, which could take years before the EU can be confident it has somewhat of a grip on its economic future.
Yeah, we do hope those efforts, looking at alternatives like the nuclear plants, will actually feel a little bit of that. But how's the market reacting to all of this?
Well, European markets opened upwards this morning, cheered by strong corporate earnings despite fears of a potential recession. Investors will be monitoring those latest figures that I just mentioned very carefully, digging into the details released by the EU Statistics Agency. It could be that the short or medium-term stagnation is already priced in, but when the outlook starts to turn, we could see more downward movements from the markets, and that's what we're looking ahead towards right now.
All right, Daniel, thank you so much for that update. Do enjoy your weekend. Still talking about energy prices in the UK, the government is talking about that £400 energy payment to households. We have Juliana joining us now to give us the details of how they intend to go about it. Good afternoon, Juliana. So this is supposed to be for households in England, Scotland, and Wales.
That's absolutely right. Good afternoon, Innie. So it's for all households this side of the Irish Sea, and this is all part of that multi-billion pound support package that was announced by the former Chancellor, now leadership candidate Rishi Sunak, back in March, after we discovered that the energy regulator, Ofgem, would be putting up the price of energy bills, the basic price of the energy bills. So it's gone up once. We're expecting it to go up again in the autumn and even further in January. So what the government are doing is trying to help people as much as they can. So there's that £650 support, which is a direct payment going to millions of the most vulnerable families in the UK. And if you are elderly or disabled, you get more support, but for everybody. So it doesn't matter who you are, including the Prime Minister would be able to get this £400. And today the government have announced how they plan to distribute it. So people will receive it in 6 instalment payments that will come off your bill beginning from November, I believe, October. So from October and November, £66 a month will come off your energy bill automatically, and I believe in the latter months, the latter 4 months, it will come off at £67 a month. Now, how this is going to work depends on how you pay the bills, and this is where there are some concerns from charities. So if you are a direct debit customer, you will see that come off automatically, whether you pay monthly or you pay annually. If you are fortunate enough to be somebody who pays a pay-as-you-go but has a smart payment meter, then you will see that £67. I hope I'm not boring you but these are crucial points for our viewers.
Yes.
In the UK, you will see that money come off every month from your smart meter. However, as I said, there are some concerns from charities because there are about 1 million people in the UK that are apparently off the grid, don't have smart meters, are still, using a stick to stick in their wall to get to pay for their gas. And if you do fall into that category, then it's really difficult for this £400 to help you. But we are in summer at the moment. Parliament isn't sitting. We know we're looking for a new Prime Minister at the moment. So unfortunately, even though this issue about energy bills is really, really important to loads of people, it just doesn't feel that the government is doing enough to get it sorted out. However, this £400, which was announced today, it's backdated. So this is from March, but they've just highlighted how they plan to distribute it. I hope that was clear.
It's clear, Juliana. I was just trying to imagine if that could be replicated in Nigeria. When you talk about those who are not captured in the data, we do have a huge figure of that back here in Nigeria. But let's see how the markets are doing at this time.
Well, the markets at intraday are doing fabulously well. We've had a slew of corporate updates from NatWest. We had corporate updates from the BA owner IAG. They've really lifted the FTSE All Share. There were some concerns because, of course, the world's largest economy should technically be in a recession. But, of course, as we discussed this morning, the Americans use so many different factors to contribute to what a recession is. But Wall Street was high overnight, and that led the FTSE to be in positive territory at early trading. It does remain that way at intraday, and in the currencies market, the British pound is also doing fairly well against other currencies.
All right, Juliana, thank you so much. We do hope that positive sentiment flows through the weekend till next week.
Have a great.
So let's move to Asia now. Hong Kong's Hang Seng Index fell more than 2% on Friday as tech stocks came under pressure. The benchmark index slipped 2.64% in the final hour of trade, while the Hang Seng Index dropped 5.41%. Japan's Nikkei 225 struggled for direction and closed fractionally lower at 27,801.64 Other topics index dipped 0.44% to 1,940.31. The country's industrial output jumped 8.9% in June from the previous month, and the print surprised to the upside after falling in May. Elsewhere, South Korea's Kospi rose 0.67% to 2,451.5. The Nasdaq advanced 0.66%. The S&P AX 200 in Australia was up 0.81%. Thailand's market is closed for a holiday Friday. MCSI's Broadex Index of Asia Pacific shares closed also positive. In the U.S., stock futures rose as Wall Street looked to finish the week and the month higher. S&P 500 futures climbed 0.7%, while Nasdaq 100 futures added 1%. Futures tied to the Dow Jones Industrial Average gained 66 points. Wall Street was set to post strong weekly gains. The Dow is now up nearly 2% for the week, while S&P 500 and Nasdaq Composite are up 2.8%. The major averages were also on pace for their best month of 2022. The Dow is on track for a more than 5% gain for July, while the S&P 500 could finish higher by 7.5%. The Nasdaq Composite, while still in bear territory, is up more than 10% for the month. Going to the oil space now, prices rose in European trading on Friday as attention turned to next week's OPEC Plus meeting and expectations that it will dash U.S. hopes for a supply boost. Brent crude futures for September settled due to expire on Friday, gained $2.44 to trade at $109.58 a barrel. The more active October contract was up $2.30 at $104.13. U.S. West Texas Intermediate crude futures ended the day at $98.59 for a gain of 2.3%. Both contracts are set for a second monthly loss, however, down 4.6% and 6.8% respectively. A weaker dollar and stronger equities also lent support on Friday. A fall in the dollar makes oil cheaper for buyers with other currencies. Global equities, which often move in tandem with oil prices, were up on the hope that U.S. monetary tightening will not be as hawkish as initially expected after disappointing growth figures. Gold prices rose on Friday and were on their course for their best week in nearly 5 months as the United States dollar extended its retreat in the wake of worrying U.S. economic data. Spot gold rose 0.2% to $1,759.79 per ounce. It's gained about 2% so far this week, the most since early March. U.S. gold futures rose 0.4% to $1,757.80. The U.S. economy unexpectedly contracted in the second quarter, raising risks of an economic slowdown, which helped lift safe haven gold prices by more than 1% on Thursday. Let's take a break now. When we come back, we'll head to the African continent. And top on the list is the reforms going on in the electricity sector of South Africa. Find out more after the break. This is Business Incorporated on Channels Television. You're welcome back. You're still watching Business Incorporated here on Channels Television. South Africa's Treasury is finalizing a plan to take over a portion of Eskom's 396 billion rand debt as part of a process to place a struggling electricity company on a sustainable footing. National Treasury will seek Cabinet and government's approval for the broad brush strokes of the debt transfer, which will be announced in the midterm budget scheduled for October. And after determining the amounts, along with the conditions the utility will need to meet before and following such a transaction. Setting a plan for Eskom's debts will mark a key step towards turning around the engine that drives the nation after years of government bailouts and rolling power outages that have weighed on an already struggling economy. Even this week, we've had a lot of stories on South Africa electricity, so that's why we have Matt Kindigan now joining us to help us give us a wholesome picture of what's going on there. Hi, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the program.
Yeah, so I mean, I think we've had like 3, 4 stories coming from the electricity sector in South Africa this week alone. Why are these reforms happening now?
Yes, certainly. So it's all very exciting at the moment in terms of the electricity sector in South Africa. Really, what's happening is the government is facing up to the fact that the state-owned utility Eskom is struggling to reform itself and also meet demand for electricity. What we have seen is over the last couple of months, and especially the last few weeks during quite a cold winter in South Africa, is extreme power shortages. So the worst that South Africa has ever seen. Some parts of the country are enduring up to 12 hours a day without electricity. And this is really beginning to hinder economic activity and investor sentiment in the country. Just a couple of weeks ago, the rand began to lose some value, and part of the reason was because of very bad news around electricity generation in the country. So what we are likely to see is the government push ahead with more liberalization of the sector. We are likely to see the government really come to terms or admit and accept the fact that the electricity sector needs wholesale reform. And so this is why this is happening at the moment.
So I guess this acknowledgement is the first step, but how soon can we expect that these reforms will begin to impact businesses?
So it's not going to be immediate. I mean, it's in terms of the reforms, a couple of things really stand out. So one of the things that the government has done is it has allowed the private sector to supply an unlimited amount of electricity to the national grid. Previously, the government had limited independent power producers in the private sector to generating 100 megawatts. This obviously wasn't enough to solve the power problems. So that's one element. The other element is that there's been a huge explosion in the number of households and businesses that have solar panels on their roofs to compensate for the lack of electricity from the grid. And the government will now allow these households and businesses to sell electricity back to the grid. And that will probably have a small positive impact in the short term. But the problem with South Africa and the electricity situation there is that the shortages are so severe, and the investments required to compensate for the deficit in power at the moment are so large that it will take at least 18 months before we begin to see the first meaningful benefits as a result of increased independent power production in the country. These investments are very significant. They require planning approval as well from the government. So we're unlikely to see a significant approval for the next sort of 18 to 20 months. But we could begin to see things like municipalities procuring their own electricity independently. The city of Cape Town has said it is very keen to do so. And we're also going to see big industrial operations like the mining industry, maybe the automotive sector as well, more proactively procure power independently. So we could begin to see the effects of this within the next few months, but probably only after the next 18 to 24 months.
Yeah, 18 to 20 months. And obviously the success or not of these reforms will have a whole lot to do with the outcome of the economic growth at the end of this year or next year.
Exactly. So one of the reasons why here at Frontier View we had downgraded our growth view for South Africa was because of severe electricity shortages. This is illustrated by the fact that the mining industry and manufacturing, although these are two very large, sophisticated industries in South Africa and should be benefiting from very high commodity prices at the moment, especially the mining industry, what we have seen is actually a contraction in activity over the first 6 months of this year. And this is almost a direct result of electricity shortages. So as soon as these industries will be able to procure their own power on a much bigger scale, then we will begin to see beneficial effects in terms of investment into these industries, but also export revenues or exports from the country, and also government revenues as a result of improved mining royalties, for example. So we could see maybe a 0.5 percentage point improvement in growth over the next year or so if there is a very rapid turnaround in the country's electricity generating capacity. So it will be crucial. It will be very beneficial in terms of averting another recession over the next couple of years. But the thing worth noting is that if these reforms do not take effect very quickly, then the risk of South Africa seeing a stagnant or low growth or even negative growth is very pronounced, simply because the scale of the problems we're seeing with Eskom are so severe. So this is certainly good news that the reforms are taking place, but we do need to see quite aggressive timeframes when it comes to implementing these reforms.
Implementation too. Well, thank you so much, Matt Kiniga, Practice Leader, Sub-Saharan Africa with Front of You. Thank you for sharing your thoughts with us this afternoon.
Great, thanks very much.
Moving on now, just before we go, India and Egypt have signed a memorandum of understanding to set up a green hydrogen plant with investments of $8 billion and capacity of 220,000 tons annually in the Suez Canal Economic Zone. According to the MoU, Indian Renew Power Private Limited will build a factory to produce 20,000 tons of green hydrogen a year with investments worth $8 billion. Nigeria is renewing economic ties with Mexico 3 years after it banned Nigeria from exporting hibiscus flowers. Nigeria in 2017 exported 1,983 containers of hibiscus flower, also known as zobo leaves, and earned $35 million within the space of 9 months. Unfortunately, the flower was banned as a result of pest infestation seen in some of the consignments shipped into the country. Commodities trader Glencore said it is set to produce less copper this year than previously forecast, and that's because of technical issues as at Katanga mine in Congo. The Angola-Swiss multinational lowered its copper production guidance figures by 4.5% from 1,110 to 1,060 because of ongoing geotechnical constraints related to the open pit and ongoing challenges of managing larger volumes of acid-containing ore. The firm's copper production was also lowered by selling off its mine in Chile and its Ernest Henry mine in Australia. And that's it for the program today. Thank you so much for being a part of it. I'm Ini John Mekwa. Do have a great weekend.